So because all of you are either directly or tangentially involved with the multifamily business, what's happening legislatively is going to impact your day-to-day life very significantly. And there have been some pretty significant headwinds to the multifamily market legislatively, going back to the Roberts decision, which basically said that everything that DHCR and HPD have been telling you for 13 years was wrong. DHCR would say, hey, if you get a vacancy in a building with a J51 on it, you could increase the rent, the legal rent, by the vacancy bonus, by the individual apartment improvement, 1/40th increase. And if you got that rent above a threshold, you could deregulate the unit. The Altman decision in the Stuytown case basically said, no, you can't do that. And I admire folks who operate these multifamily buildings, because everything from a legislative and governmental perspective is going against you. And that does create a barrier to entry. It's a good thing for the market, because basically foreigners don't want to get involved in this labyrinth that is New York's rent regulation system. So there's a barrier to entry. But the headwinds continue to grow. And this decision was really remarkable, because if you think about it, we have such a complicated and convoluted rent regulation system. And so people have to go somewhere to understand the rules of the game. Most people go to DHCR. DHCR is the referee, it's the rule maker. DHCR said do A, and when DHCR said do A and you did A, another governmental agency, HPD, said, oh, you did A, well, we're going to reduce your taxes or increase your taxes based on the amount of units that you deregulated. So HPD effectively ratified what DHCR did. So you have these two big governmental powerhouses say, you know what, you can do that. And some judge says, no, you can't. And then the judge further says, no, you can't, but doesn't say what you can do. So the best landlord-tenant attorneys in town still can't tell an owner exactly what to do when a unit becomes vacant in a building with a J51 on it. What they'll say is, how much risk do you want to take on? How risk averse are you? You want to take no risk, a little risk, a lot of risk? But they can't even tell you what's going on. So the Altman decision was a significant headwind to the market. The Altman decision is another one that hurt owners very significantly. The Altman decision said you have to have the last tenant in place paying that legal rent. This threw another whole wrench into things that has created a problem, and again, a headwind for the multifamily market. The third is the Schuler decision. This decision was a recent decision last year that came down. It was a very complex scenario of circumstances, but effectively what it said is, if you have deregulated a unit in a regulated property, even if you've had a succession of free market tenants in that unit since, we still might go back and charge you overcharges, and you may have deregulated it improperly, even if it was years ago. And so these things have created significant problems for owners of multifamily properties. Now, we've had two lower court decisions that have been kind of positive for the multifamily market. One was an Aimco case, which basically says that the Altman decision is not correct. And so it was an adverse decision to Altman, but it's in the lower court, it's being appealed. Another one is the Todris case, which basically said because owners were relying on HPD and DHCR, they didn't do this stuff intentionally. And so the 4-year look back on liability for operating these properties has been supported by the Todris decision. Unfortunately, both of those decisions were in the lower court. They're being appealed. We'll see what happens. But those things are certainly, you have to have a lot of intestinal fortitude to deal with this stuff in the marketplace. And then lastly, last headwind is the rent freeze that went into effect last year. That rent freeze has been proposed again. And I think what you're going to see, the administration has this objective of creating or preserving, and that word preserving is very important, creating or preserving 200,000 units of affordable housing. I don't think there's anybody in the city even in the real estate market, that doesn't think the city needs affordable housing and wants affordable housing. We need that affordable housing desperately. We need it for the people who make the city run. The police, the firemen, teachers, people who work in bakeries and auto shops. We need housing for those folks, and it's very, very tough for them to find it. So we need the affordable housing, but the implications for affordable housing based on what has happened with land values is very negative, right? What happens when you want to create affordable housing, you have to build stuff. You can't build stuff in a market where land values are falling because land stops selling. And the perfect example of this is, go back to 2006. In Manhattan, there were 321 development sites sold in 2006. By 2009, the values had dropped from 2006, the average price per buildable square foot, $375. By 2009, the average price per foot dropped to $336 a foot, so only about a 12% drop. But if you look at what land was really worth in 2009, it probably was worth $150 a foot. So what happened? People were bidding $150 a buildable foot. The sellers weren't selling. So the 321 sales that occurred in 2006 dropped to 13 by 2009. So land's not selling. So now we're in a market where land values are falling. Land's not selling. You're not going to get new affordable housing. And on top of that, the administration is forcing mandatory inclusionary housing in anything that has been rezoned. If you go for any kind of a variance for any type of job, you are going to be required to bring in a higher percentage of affordable housing than we've had in the past. And the administration's big claim to fame is that, hey, we got on Astoria Cove, we got it up to 28% to 27% from 20, and they've been, oh, this is the greatest thing ever. We went from 20% to 28% affordable. Well, you know how many units have been built out there? Zero. The owner does not plan on constructing because the numbers don't make any sense. So, and I've said this to the mayor, that you create the right set of incentives, the private sector will do anything you want. The private sector has amazing dexterity. Jeff, if they give you the right combination of incentives, you can build 20,000 units in a year, right? I mean, 2 years. So because you're not going to get the creation of new units, at least in the short term, the administration has to focus on the preservation of affordable units. What that means is, are we going to see another rent freeze this year? Very likely. What happens next year? Who knows? Would they propose a rent rollback? Are they going to suggest rents drop 3% in regulated housing? Wouldn't be surprised to see what happens. But the great thing is that we're in New York City, that is projected to have 1 million more people coming into the city over the next 20 years. And the demand exceeds supply very significantly. And if you're going to deal with these kind of headaches and these kind of nuisances, you want to do it here rather than anywhere else. And over the long term, although, you know, we go back to that chart back to '84 and you see the cyclical nature of the market. The great thing is that if you buy a property and you don't over leverage it, at the peak of the next cycle, it's going to be worth a heck of a lot more than it's worth now. So notwithstanding all the noise in the marketplace, we think investing here is a great thing. Hopefully you learned something tonight. Hopefully we didn't confuse you too much, and shed some light on some things.